Hello guys, and welcome to a Fibonacci video. This is not going to be your typical Fibonacci video. I'm going to show you some more in-depth stuff that a lot of channels do not talk about. Fibonacci is a very underused tool because it's not very well understood. So I'm going to show you today how Fibonacci can be used for more than just finding some lines to buy the dip, so we can buy a retracement. And if you'd like to know more, if you want to learn more about this kind of stuff, check out the link in my description. That is my latest book that I put out, and it talks all about Fibonacci and how I use it to enhance my trading, to find some really cool sweet spots that show you where buyers and sellers are at. So in the first example that I'm going to show you guys is Apple. And I'm not going to go into anything too complex, but if we, for example, just make a quick measurement from the highs to the lows, we can see a few things. So Fibonacci is cool because there's many things it can show. It can not only show us where buyers and sellers are located at, but it also shows us their stance. It shows us their temperament. And we can convert these candles, instead of just candles, we can turn those into actual behaviors from buyers and sellers. And you have to remember that in the end, the market does not care about lines. The market just cares simply about supply and demand. It wants to know, what are buyers doing? What are sellers doing? Are buyers aggressive or are sellers aggressive? Are buyers stubborn or are sellers stubborn? And so many other things. And so one of those things is one of those actions I can show you right here on Apple. So if we look at this chart, we see that price made a big drop right here back in 7/15/2024 through 8/5, right? We had this big drop, so it's a big swing, so therefore we can go ahead and set up one retracement from here. Now keep in mind, this measurement I just laid out is not exact, so this is just for the video, purpose of the video, and to save us time. I'm also not making a complex Fibonacci retracement like I show you in my book, where I give you exact levels of who's where, but this still proves the point. So if we look right here, we can see a few things. And number one is we can see that the market found buyers right here, right around from the 198 to the 210, the market was buyers, which shows a very strong candle. So that tells us that there's a lot of buyers participating down here. However, once we go up, you can see the candles start getting smaller and tighter. And then we can see some rejection up here. So now we can make, now we can make an assumption that we know where sellers are at. Sellers are right here, and they control this zone. So when the price goes into these Fibonacci retracements, you have to think of these areas as territory. Imagine a gang, and they dominate zones, right? This is where all the sellers hang out. So the sellers, the price gets up here, and they say, you don't belong here. We're still in charge of this. We're going to keep selling, so get out of here, right? And they push the price down. So now remember, we knew buyers were down here. However, if buyers are going to show an aggressive behavior, means they need to step up, right? It means they can't allow for the price to come down all the way down here again, because that doesn't really show that they're aggressive. That shows that they are simply stubborn. They're going to hang out down here. They're going to buy the lows, and they're going to hold the price there. So if you're trying to swing trade Apple and you're trying to go long, you want to make sure that you buy into a name that has buyers that are aggressive, meaning buyers that step up when the price comes down to them. Therefore, in this example, the price went up. They found sellers. The sellers are up here, right? And then what did the sellers do? They push the price down, which that's what sellers do. They push the price down, they sell it off. So now the next thing we want to see is, okay, where do these buyers move to? Where are they now? And if you can see by these pin bar candles right here and how they bounce the price up, we know that the buyers have moved up here. So this now tells us where buyers are at, and we know where sellers are at. So therefore, if I'm taking a trade, I expect buyers to hold this price right here around, let's say, 216. And I know that our hurdle, our challenge is going to be to get past 230, because I know the sellers are there. This allows me to make a better trading decision and to be able to stay in my trade longer and also to be able to cut my loss faster. So as the price continues, we will see what buyers do. So as you can see right here, the buyers slightly allowed the price to come down here, but right away they pushed it up here. And notice how the price stopped right there again. So if I was still in a swing trade for Apple, I know that sellers are still holding the line right here. Sellers are being stubborn. They're stubborn because they are staying at the same exact spot where they were last time. They're not being aggressive, because if they were aggressive, they wouldn't allow the price to come this close to their territory anymore. Instead, they would start selling off here, or they would start selling off here and slamming the price down further down. So this doesn't show an aggressive behavior by sellers, but more of a stubborn, we're here, we're still here kind of attitude. So as a buyer, I know that my guys, my team, we should still be here and we should still be able to control this zone. And that's what I want to see if I'm in the swing trade. I don't want to see sellers pushing through this level, because that shows weakness. And that tells me we are probably going to start seeing some lower prices. And I probably want to get out because I don't want to see those lower prices. So let's keep going. And you can see, look at buyers, what they did. So buyers, let me just clear this up a little bit. Notice how when the price started coming back down, buyers, which were buying down here, they moved up. They moved up and they started buying up here in this zone. This is showing an aggressive behavior by buyers, because once again, if we want the price to go higher, we want to see buyers pushing up. We want to see them buying higher dips. This is what you call higher lows. That's why when you get these triangles, right? These patterns in the market, and we see higher lows, that's what we're seeing essentially. We're seeing the buyers step up in zones and continue buying the next higher order. So now check this candle out. This is showing that the sellers are backing off because they allowed the price to close above where they haven't done so, right? They haven't done it in a while. And this also shows us that these guys are getting more aggressive because they're trying to push through the seller controlled zone and they're making it happen, right? However, one of those things that we want to see for it to be an effective close is we want to see these guys doing this behavior, but we want to see it happen with volume, right? So right here, if you look on the bottom, this is a script that I wrote out and I use it. And it allows me to ignore everything that's normal average volume, and that's notated by the gray bars. And when there's greater than average buying volume, it shows it in green. When there's greater than average selling, it highlights it in red. So therefore, look at how the buyers attempted to make this move happen, but the buying wasn't quite there. So now you have to ask yourself, was there enough market participation for this move to be successful and close above there? Well, if the volume's not there, then there's a chance that it might not be that strong of a move and it might be met by some resistance. So as we keep going, you can see that the sellers did take this thing down and there wasn't enough volume. And actually the very next day, the sellers came back with greater volume and they pushed the price back down. So, but check this out. For 3 days, look where the buyers are holding the price. Exactly where they were holding it last time. Once again, if I'm a swing trader and I'm in this trade, I don't want to see the buyers just back off. I want to see them stay there. Worst case, I want to see them only go down here, right? We don't want to lose territory as buyers. We want to gain more territory. The sellers are protecting what's theirs. They are still here. And that was just a fake out. That's why you've heard, if you've been in the markets long enough, is don't be so quick to buy a breakout. Because a breakout bought too early could be a fake out, right? You'd rather see the price close above for a few days, come back, retest it, hold it, meaning these buyers moved up here and they're buying that dip, and now you want to buy the dip, right? And all this comes with timing and being in the markets long enough to understand these concepts. So let's keep going and let's see how this played out. So buyers tried to push up into the seller controlled zone, which we've already mentioned. But check this out. Now sellers are coming down and pushing into their territory. Look at that. and they're closing at the bottom of their territory. So you can see how this shows us buyers backing away. Why? Because for these 3 days, actually 4 days, they bought the dip. These pin bars right here, these long wicks show us that they bought the dip and they were defending. But if all of a sudden now buyers allow sellers to close all the way into their territory, that shows these buyers right here backing away. They're saying, all right, cool, we're done trying to defend this zone. We're going to move lower. So the question becomes, how low are they going to move? And just like that, they didn't move lower. They actually stayed all the way at the bottom, but they came back again. So this tells me that while we have aggressive sellers, we also have aggressive buyers, and they are literally fighting right here neck to neck. And it just comes to the question of which one's stronger. Where is most of the money going? And that is where we're at right now. So right now, that is exactly where it stands. So if I'm a swing trader and I'm, let's say, for example, long, I want to see Apple buyers close above here, break into a little higher, right? Maybe even break past these highs, come down, and then I want them to hold the price here and retry pushing higher, because that shows me a very bullish behavior. However, now that we know where current buyers are at, which is right here, I don't want to see the price fall down here, which is okay, right? Because we've already seen Apple buyers save the price and push it back up. But if we start closing into these levels right here, well, we haven't been there since back in September. So if buyers are on this quote unquote aggressive behavior, there's no reason for these guys that have moved up here to allow the price to come back down here, because now that shows they're really taking their foot off the gas pedal, and sellers are accelerating, and they might start closing lower, lower, and lower. So that is one way of how we interpret buyer and seller action using Fibonacci zones. And remember, this is a very simple Fibonacci measurement that we did right here. I hope you guys learned something. Like and subscribe. And if you guys want to learn something else about Fibonacci in the market, go ahead, do me a favor and comment down below and let me know what is the concept that you would like to understand more so I can get back to you.